Yeah, I mean, I think the reaction to these numbers just shows how low the expectations have become for this company. 2% user growth is not that impressive, but the market is acting like they're, going to take over the world here. And we think there's been, so much bearishness, so much trouble with this company over the last 2 years. It seems like the market's willing to reward them for even the slightest signs of improvement.
Hey, Brent, do you agree with that? I know you were looking for user growth, and we did see better numbers on that front.
Yeah, I mean, this comes down to the user and revenue number. The user number is 1 million shy of its peak, so that shows you you're having users come back to the platform. They're creating more engaging experiences. They've got the Android platform now available to everyone, which was key. They said iOS was growing in Q4 and sequentially. Now Android is available. That's a bigger population of smartphones, so that's great to see, and that's stimulating the user growth number. So I think you have a couple things left that they have to figure out. You have to get a CFO on board, and certainly this pathway to profitability. The losses were a little bit better, but Twitter had good numbers. Even eBay was able to put up good numbers. I think this suggests that the overall environment's really good right now for tech.
Tom, what do you make of that point in particular? Do you think Snap's taking share back off Facebook, or given the Twitter user growth as well, do you think all of this bodes well for Facebook?
I would say it's a little too soon to tell exactly what this means for Facebook. This could just be, a rising tide lifting all boats situation. And Twitter's numbers obviously looked very strong, and Snap reflected that as well. So broadly, there is advertiser interest in digital advertising. But look, there's no denying that the user growth being up sequentially, it's now, from being flat last quarter to being up, is a huge step for Snap. They haven't had this in quite some time, and there's still a huge hole for them to dig out of. But these are the steps that a company needs to take in order to really recover.
Brent, the average revenue per user was also higher at 168 versus 163 expected. How are they doing that? How are they increasing the monetization for the users behind the scenes?
So they went to a new platform last year. They went to the programmatic platform, and they have said that as they add more advertisers, that density of that platform will build, and that the pricing deceleration will stop. They will actually be able to show prices that can go up because the auction's supporting that. So exactly what they've been telling Wall Street, they're delivering. This is good to see from a pricing perspective. And again, when you compare that ARPU relative to Facebook and Twitter, they have a long way to go. Again, I think our primary concern is when you have a younger millennial audience on this platform, can you monetize this audience? And we think as those age up with the platform, there are more engaging experiences and content that they can drive, and advertisers are going to be attracted, to the platform as they see more and more people stick on the platform. So we expect ARPU will continue to grow. It's great to see, and I think it's a direct reflection of the changes they made over the last year.